Welcome back. This is Eric Snell from Vanilla Equity, and today we have Domino's Pizza on the radar. Now, Domino's Pizza, it's a little bit like McDonald's that we discussed last week, in the way that people are now looking for cheaper alternatives when they dine out or pick a restaurant where they want to eat. And when it comes to fast food, I think you're going to have a lot of people going to the drive-thrus, but you're going to have a lot of stressed people now, and they're just going to order pizza home. And what better than to order from a big chain? And this is something that happens throughout the world. We have some dominant pizza chains, and I think Domino's is one of the biggest ones. You have Pizza Hut, but we can't buy Pizza Hut separately. I believe, was it PepsiCo who bought them many years ago? But we can trade Domino's. Now, maybe another competitor that we could compare is Papa John's. And they're also internationally spread. They did a big deal in China, so we expect a lot of new Papa John's in the south part of China. But otherwise, these two, when we look at the stock prices, they're actually going quite a lot hand in hand. And they're both opening up a lot of new stores. They've slowed down a bit now. Papa John's is much smaller than Domino's, so I think it's about a fifth of the size. Domino's has about 18,000 locations, and most of them are actually outside of the US. And I wouldn't say they're in all countries, but for instance, they're still in Russia, they're still there, they're still operating despite the war. And when we look at Domino's development and we look at their cash flow, they look very interesting. They did slow down when we look at the latest quarterly report. If you go on Domino's homepage, it might be that you can't find it in your country's homepage, but you can go on some of their homepages. They show the investor relations information, and there you can find the earnings, all the financials, and there you can see that actually it has slowed down a bit now, and they're not growing at the pace that they thought they would. Apparently also they don't expect to open up as many franchisees as they did in the past, but still it looks very healthy, it looks very international. I consider them to be a market leader, and from my own experience, yeah, they're tasty. It's a American style pizza, so it's not the Italian one. Can you tell the difference between a Papa John's pizza and a Domino's pizza? I don't know. Apparently the prices are cheaper at Domino's. If now price is the issue that everyone's going to look at, if the inflation keeps going at this pace and we have a recession in all the countries and people are just going to stare at the prices, then Domino's could be a good solution. There are, of course, smaller chains that offer a little bit cheaper prices, but I still see Domino's as a very good choice. And when we look at different sectors, at least we know that the population is increasing and the population has to eat. You might be able to get away without buying a new car next year, but you will still have to eat. And one of the choices is going to be something that doesn't take a lot of time and doesn't take a lot of money, and you can feed the whole family with. And that's, I would say, pizza. So we keep Domino's on the radar, and then we're just waiting. We're waiting for something where the market is exaggerating. We need a reaction, an exaggerated reaction, and you might remember, but most likely you won't, but a lot of restaurants such as McDonald's, Chipotle, they have had issues at times where maybe in a small restaurant somewhere in a distant location, someone has found something weird in the meat, and it's a big fuss, so where they have to close down the restaurant, they have to go through the packaging, the process they have, and the stock price just goes down. And this is something that is actually, when this happens, it's a big thing, it blows up. But for a big chain, when you have 18,000 stores, what happens in one store doesn't really affect the whole business itself, unless it's really, really bad for the brand. But in most cases, people tend to forget these issues. And when you look back at the stock price, it's like, okay, when did it happen? When was that? When did Chipotle have the problem with their chicken or whatever it was? No one remembers. So this is why we keep these stocks on the radar. So when there's a exaggeration and the price dips, then why not buy it? Or why not buy it every month and just dollar cost average it? So yeah, we'll keep that on the radar. I'm Eric Snell, and if you want to know more about vanilla equity, just go to vanillaequity.com. If you think you're a good investor and you have a good track record, but you don't really have the capital, then maybe vanilla equity can help. See you next week again.